Okay.
All right, we're good. Let's go.
You're like a master of Zoom now, aren't you?
Too much time spent on this.
Too much time spent on Zoom. Okay, I'll start. Please ask questions. Okay, what happens at Iterative? Any chance that I get, I try to use pictures of my hometown of Penang. So, gratuitous, just hometown schlepping. Okay, the main thing I want to start with is that Iterative helps you with your startup. The reason why I bring this up right away is that I think a lot of people think of Iterative as like, and I know that a lot of accelerator programs have like classes and they like teach you, there's like a class on growth and there's a class on this and there's all these things. We don't have any classes at Iterative. There's absolutely no curriculum. Madhu can attest to this. There's no set curriculum. We don't teach you kind of any kind of like generalized stuff. The reason why we don't do any of this is running a startup is very nuanced, and every startup has its own challenges and strengths and weaknesses, and every founder does too. And so we find that if you take a general approach to helping people with their startups, if you want to make the content necessary such that everybody can kind of benefit from it, then it ends up being not that useful for anybody. And so we take a very specialized approach here. We also found that for founders, it's so funny. This is the way I was too. You don't really care about how anybody else is going to be successful with their startup. The only thing you care about is how does my startup become successful? And so that all comes through just like really specific advice to your situation. So if there's anything you kind of want to take away here, Iterative helps you with your startup. We don't teach you about startups. We help you with yours. Okay. The goal of the program is to significantly increase the value of your startup. And I don't mean valuation. Valuation ends up being a byproduct of increasing the value of your startup, but it is not kind of the end goal. So I think sometimes people like join Iterative because they think we're going to help them like raise a bunch of money and all that stuff. That might happen, that has happened, but that is not the main goal of it. You'll actually hear us talk very little about valuation during the program. And actually, I think the first 8 weeks of the 12-week program, we don't talk about fundraising at all. It's like borderline banned. We even tell people in the batch that if investors reach out to you during the 8 weeks of the batch, tell them politely that you'll contact them like later, like during demo day and stuff. What we're looking to do here is we want to increase the value of your startup. And the best way to do that is to make something that a lot of people want. And if you can do that, then the value of your startup goes up. The way that you can demonstrate value of your startup is by growing very quickly. So during the batch, our goal for all of our startups is to grow 5 to 7% every week. That is not a cumulative number. That is like on a week-by-week basis. If you grow 5% a week for a year, you will 12.6x your company. And if you grow 7% a week for a year, you will 33x. So that is roughly the how quickly we're looking for companies to kind of grow. If you are an earlier stage company, you can actually grow much faster than that. And if you are a later stage company, you'll probably grow a little bit slower. But we try to get in this 5 to 7% weekly growth. At the very start of the program, we actually sit down with you and we set some target for the end of it. So we figure out what your North Star metric is, and we figure out where you are now and where you want to be in 3 months. And we roughly kind of like level set on whether you're being aggressive enough or not aggressive enough. Once we set those things in place, then every week we're just looking at those metrics. So I don't know, if you're at 1,000 GMV now and you want to get to like, I don't know, 50,000 by 50,000 a week by the end of the program and stuff, then we have weekly goals broken out and we start going to work from there. So we want to increase the value of your startup, not in valuation terms, but in terms of just like how useful it is to people. And the best way to demonstrate that is to work on growing the company quickly. Okay, so how do we actually do that? It's like, great, Hsu Ken, I also want to grow my company 5 to 7% every week. The best encapsulation of our philosophy for working with startups and working on our own startups is we help you debug your startup. Think about this for a moment. Everybody who's a founder on this call right now, you believe that you're working on a very important problem, and you believe that your solution and your product is significantly better than competitors, right? Let me say it again. if you're working on a startup, you probably believe that the problem you're working on is important and that your solution is significantly better. If both of those things are true, you should grow very fast, right? You're working on a really big problem, you have a really good solution, you should grow really fast. The reality is that most startups are not actually growing that fast, right? And so one of two things is true. First, the obvious one, you aren't actually working on an important problem and your solution is not significantly different. So that's a possibility, but that's not the first thing we think about. Two, your startup has some bug or multiple bugs. And what we mean by bugs is oftentimes you could be working on an important problem and your solution could be better, but you're maybe targeting the wrong user. Like you're working on an important problem, but the people you're targeting are like not actually the people that have that problem. You're using the wrong growth channel where you're targeting the right people, you have the right solution, but you're not getting to them in the right place. It's like, I don't know, if you're trying to get after kind of like teenagers and stuff, and you're trying to your growth channel is like, I don't know, like newspapers or something like that. It's like, okay, like you just picked the wrong growth channel here. Or it could be that you're just pitching your product in the wrong way. You think your product is about A, and that's the thing that users care about, but actually the thing that they care about is C, which is something that you just don't think that important. And so there's all these different kind of things that you could be doing wrong that we always kind of think about as kind of like bugs. I think the thing that's tricky too is that often these bugs are, you could have multiple bugs in your system. And if you solve one of the bugs, it's not like the growth comes out at once. And so it's hard to sometimes tell if you're solving the right bugs or, you know, like how many bugs there are. So you could be solving all the right stuff, but you still don't see growth. And we see this sometimes with companies in the batch. If you solve enough of the right bugs, though, at some point the growth comes, and then it kind of like hits into this inflection point, and you grow quite quickly for a while. So given that all these bugs, what we do in the program is we help you kind of like debug and understand what those things are. And that typically comes through actually kind of like running experiments to validate what the bug is. I don't know how many people here are engineers. Brian and I are engineers, and so we always kind of think about things in this way. But when you come to us and you're like, okay, fix my startup, I don't have answers for you. I'm not gonna be able to fix it just like that, right? There's no magic to it. It's not like I can just like fix people's startups just on the fly. I wish I could. I would be much richer and much more successful and all that stuff. And but the reality is that there are things that you can do to help you figure out what the bugs are. Just like in software engineering, when you're like trying to debug your program, there are specific tactics and frameworks that you can use in order to like debug faster. Again, I don't know how many people are software engineers here, but a really bad engineer who's trying to fix a bug in their program is like just going through their program and randomly changing stuff and then running the program and hoping for something different. So they don't actually have an hypothesis for like why the program doesn't work. They're just changing stuff. Really good engineers can sit down and like look at the program, see what the problem is, and then come up with hypotheses of like, oh, maybe it's this, okay, maybe it's this, maybe it's this, and they can slowly test it. So we work with you on that. And by the end of the program, ideally, we've helped you fix a bunch of the bugs. You can grow really fast, which means a lot of people are using your product, and you can kind of move on to the next stage. Okay, let me pause here. Madhu, any questions I should kind of like tackle here?
Yeah, I think Dipesh is asking, what are the key metrics for measuring like, growth or success?
Yep. Okay. So great question. I always think about products in 4 basic metrics and buckets. And I think almost all products can be grouped into these 4 metrics. There is growth, which is just how many new people are using your product. Activation, which is how many of the new people have actually like used the product. And activation, if people aren't aware, is like, let's say you sign up for Grab. If you've never actually taken a ride on Grab, you haven't activated. You signed up for Grab, but you haven't used Grab. And so there's growth, there's activation. Then there's retention, which is, do you consistently use the product over a long period of time and at kind of like what frequencies? And then the 4th is monetization. Do you make money off of the users that you have? So all products you can kind of break down into those 4 buckets: growth, activation, retention, monetization. Depending on the stage of your startup, you reorder the priority of those things, right? So in late stage startups like Grab, for example, they really care about monetization a lot because they're trying to like build this business and they need to be profitable and they need to do all these things. Very early stage startups often will care about retention. And the reason why retention kind of like matters is because if you're not maintaining people. You're not actually growing. So if you are, let's say you get 100 new users every week, but you drop 120 users, you didn't actually grow. Your user base is net negative 20. And so unless you fix the retention one, it doesn't make sense to grow. And then you kind of just like keep shuffling and reprioritizing. But I would look at those 4 kind of like key metrics as like a general kind of framework for how to think about your startup. Okay, Susie asked the question about how fast is very fast. The target that, like I said before, the target that we always kind of shoot for is 5 to 7% every week. And so that's what we're looking for. What that feels like oftentimes is what very fast feels like is there have been times when we've been working on our startups and the growth is so fast, we think there's a bug. Like we just can't imagine that we're getting that many users. Like it's impossible. There can't be. And so we used to have this joke where it's like, you're not growing fast unless you spent some number of hours like debugging your like user database to see that like, to make sure that your numbers are actually real or not. Right. I mean, Madhu, I just asked you to do this recently. Remember with the conversion number, I was like, there's no way that the conversion is that high. Right. And I was like, can you look at it again? So the numeric answer is 5 to 7% a week is what we're looking for. But the like feeling of it is like, it's so fast that you like, don't think it's true. Other questions here? I can go on to kind of like how the program like structurally kind of like work. What's the point of it? But any other questions here about debugging startups?
Y'all can just like unmute and just ask the question. It's like free and easy, interactive.
Yeah. Write in chat if you're shy, ask.
Yeah. Going once, going twice. Okay.
Okay. So I'll keep going. Okay, so what actually happens though? So, you know, I think the setup was important because I think the program makes a lot more sense if you kind of philosophically understand our approach to startups. So here's what practically happens. There's a lot of office hours, basically. There are partner office hours. Partners are people in our program. So partners are Brian and I and the visiting partners. And we help you on an individual basis. So in any given week, we have basically Calendlies that are released every week, and people in the batch can book with as many partners as they want. And in the partner office hours, they're 1 hour long sessions. And the first thing a partner will ask you is like, what was your goal? What was your goal last week for growth? And did you hit it or not? And if you did hit the goal, then a lot of the conversation is around kind of like, okay, what is working and how do we double down and like do more of that? And if you didn't hit the goal, then the question is like, okay, what did you try last week? And like, why didn't that work? What are we going to do to like, what are we going to try this week so we can hit the goal? And so you can think about it as like 1 week sprints for your entire startup on whether you're hitting the goal or not. And partner office hours are Brian and I and other visiting partners to help you kind of like debug and work on those things. So the bulk of the program, and honestly, I think the thing that people tend to find kind of like most useful is just these partner office hours as people book with us in any given week. I think they're also kind of interested to find that they don't always get the same advice from everybody. And so oftentimes booking with multiple partners will give you kind of different views. There's not one way to do a startup. And so, you know, even Brian and I started all of our companies together. Brian's not going to give you the same advice that I do. Okay, so partner office hours. There's also group office hours where we put companies into groups of 3 or 5, and then we hold office hours together. And what that is we want companies to learn from each other. We've been consistently surprised with how often like hearing some other startup, even if they're working in a completely different space, how they're solving a problem or some problem that they're having helps jog my like thinking about some problem that I have. Or founders often have kind of like expertise in areas that you're like wouldn't have expected. And so sometimes you'll be like, have some problem and you'll find out one of the fellow founders was like, I don't know, he was like B2B sales for like 10 years. And he's like, oh, we should get on another call. I can help you with the B2B sales or whatever. So group office hours is to like give companies within the batch exposure to each other and the type of problems that they have and help them problem solve together. And Brian and I and visiting partners basically kind of try to stay as silent as we can, but we try to moderate. And so these are for founders to help each other. Expert office hours are, experts are people with very deep domain knowledge. So the difference between a partner and an expert, at least for us, is a partner is somebody who has started a company before. they have been founders before. And this is really important to us. I think there's a lot of other programs where you'll work with people who haven't actually been a founder before, and they're kind of partners and they're giving you kind of generalized advice about founders. It's not the case at Iterative. Every partner has been a founder before. They've been in your shoes. And I think that's important. Not to say that everybody, like everybody else who hasn't been a founder cannot be helpful. That's what experts are for. So let's say that you're really struggling with B2B sales. We have experts who are like, have had an entire career in B2B sales, and we put you in contact with them so you can ask them questions about B2B sales. Or it's HR, or it's, I don't know, accounting or finance, or I don't know, paid marketing, whatever it is. So if there's a specific expertise that you kind of like need, we have a whole bunch of kind of who we've cultivated over time who can kind of help you with that. Again, if for all the founders that are on the call, the thing that you will realize is most founders tend to be generalists, or at least there's one area of expertise that they have. So mine was like product and kind of design. But like I'd never done sales before until I became a founder. And so the thing we're trying to do here is build a support system around founders, and so that they can kind of like learn what they need to learn. So expert office hours is where you want to go really deep into a specific thing. Okay. Speakers. Speakers is we get very experienced founders who from companies that are often kind of like relatively famous to come talk to the batch. They come and talk to the batch, and it's a closed door session that is completely off the record. So like we don't stream it, we don't kind of like record it, we don't do any of those things. And the reason why we do that is we want them to tell the unadulterated story of kind of like how the startup started and all the struggles that they went through that they aren't going to talk about in the Wall Street Journal or publication. To give you a sense of this, in the past, we've had the co-founders of Airtable. If you guys know Airtable, the Airtable co-founders are college friends of mine, and so they came and spoke. Square, which is a publicly traded company in the US, one of the founders there, not Jack Dorsey, came and spoke to the batch. More closer to home, we had Moses from Zendit speak to the batch. We've had Joel, the co-founder of Fave, speak to the batch, and they tell all the stories that aren't not on a podcast, not in for public consumption. Why do we do this? Other than it's like cool to have famous people come speak to the batch. The real reason we do this is because when we were founders before, we would read all this stuff in like Forbes and the Wall Street Journal about all these other founders, and the other founder stories seemed so easy. It was like, this person made this funny website and is now a billionaire, and we've like spent 2 years building like 100 websites and like nobody uses our thing, and like I have no money, right? And I think the thing that we found as we kind of moved along and we like actually met people from these like famous kind of like companies and stuff is like all their early stories sound exactly like our story and sounds exactly like the things that you guys are going through now. They just don't talk about it internally, and frankly the like magazines and stuff just don't want to print that stuff. It's just like not fun to like hear about how hard this person worked to like make this thing kind of like happen. And so we have the speakers come in so that they can tell you about what it was like. And so if you are struggling with your startup, you kind of realize that like that's kind of par for the course and it's totally normal. And if your startup isn't growing right now, it doesn't necessarily mean that it'll never grow and it will never become this like really big thing. All these early stories kind of like add. Like I think a lot of people think Airtable is like, oh my gosh, Airtable suddenly burst on the scene and everybody's using Airtable. And I think what people don't realize is that it took them 2 years to build like the first version of Airtable, and then like year after that, like nobody used it. Like absolutely zero people used it. And like they were literally going across the street to the office across the street to try to convince this like nonprofit to use Airtable, and they like went there like every day to try to get them to use it because nobody was using it. So anyway, we have speakers come in and they kind of tell all these stories. We have a fundraising. The last two are around fundraising because even though it's not the point of the program, it's still helpful. A month before demo day, we run a fundraising bootcamp. And the fundraising bootcamp is where we teach everybody in the batch everything we know about fundraising. Brian and I have been fortunate in that I think collectively we've probably raised over like a couple $100 million now for our startups. And the surprising thing that we realized is that fundraising is a skill, not a talent. And what I mean by that is if it's a talent, you're either born with it or you're not. And if it's a skill, it means it's something that you can get better at. And from everything that I've learned about fundraising and from doing it myself and seeing friends that do it, it's absolutely a skill. you can learn how to be good at fundraising. Even if you're not the most charismatic person or you tell a great story or whatever, it doesn't matter. I have friends who are like super uncharismatic. There's like not like they tell horrible stories, all that kind of stuff, and they're freaking good at fundraising. So we try to teach you everything that we can about fundraising. I think the best way to sum up this bootcamp, which has kind of a lot of different parts to it, is I read this profile, I think it was like Vanity Fair or something, on Chris Rock. Chris Rock, the, well, I guess famous American comedian, more recently because Will Smith slapped him at the Oscars or something, I think. They did a profile on him and they talked to him about what his process was for comedy shows. And I think a lot of people assume that Chris Rock's process was he's a genius, he shows up, and he just is funny, right? And the reality, it couldn't be further from the truth. The reality is he randomly shows up at New York, like small New York, like open mics and stand-ups with like a yellow notepad, and he just keeps testing his material and he's consistently bombing. And that's basically his process, is to just like bomb until you know what works. And he's just testing like, okay, does this type of content work? No. Okay, does this type? Okay, well, let me rearrange this. Okay, the punchline should be here. Okay, the punchline should be a second later. And he's just tweaking all of this stuff. By the time you actually see him in like a Netflix special, he has worked out all of his content like meticulously, like the ordering, the staging, the emphasis, the pauses, everything. And the thing that you're seeing on that Netflix special is just like the result of all of that stuff. So he has that thing dialed in. Fundraising is the same. You want to figure out what order your pitch should be in, which parts do people react to, which parts that not. And so our boot camp is basically like, we put you through some version of that, of like trying all this stuff over and over. So by the time you reach demo day is like, you know, this works, you know, all the beats, you know, what should happen, like, and you're really confident about it. And so by the time demo day comes, it's just like, yeah, I've done this a million times. Like, here's how I do it. Demo day is similar to a lot of other people's demo day. We host a live virtual demo day, which I think something like 400 to 500 kind of investors come through. There's a lot, obviously Southeast Asian investors, but we're getting some East Asian investors too. So Japan, Korea, China, and then we get a fair bit of US investors. And the reason why we get US investors is Brian and I's network is in the US. We started companies there. And then actually most of the investors in Iterative's fund are actually US VCs and investors. So they come quite a bit too. The other thing that we do, which is maybe atypical, is we also have a demo day website. And so we'll put all the videos there for all of basically the investors who can't make the actual thing. The surprising thing to us is there are more introductions that happen through the demo day website than actually happen at the actual live demo day. I forget what the numbers were, but I think the last batch there was 19 companies, and I think the website generated like something like 300 introductions or something like that, 400 introductions. And so that's always kind of like surprising to me, because there's buttons on the website where it's like, oh, introduce me to Madhu, and they click it, then we introduce people and that stuff. Okay, so these are the things that happen through the program: partner office hours, group office hours, expert office hours, speakers, fundraising bootcamp, and demo day. There's questions, I'll get them in a moment. This is basically why there's no curriculum and there's no kind of like set thing. It's because, as you can see, all of these things are really tailored to like working with you about like whatever your problems are in your startup. So we do that. Okay, questions?
Dipesh, do you want to unmute and like ask?
Yeah, thanks. Sorry, I didn't want to interrupt in between. So the question I had, hey, Hsu Ken. So over a period of short time, not too long, one thing, unfortunately, I've come to realize, and this may be particular to me or my experience and may be wrong, and that's why the question, that investors from location A versus investors from location B, or for that matter, potential clients, customers from location A versus location B, I don't know, are at different points of time in their thought process. And sort of that makes it difficult to somewhere put a standard for, you know, telling about your product or what you're trying to do. Is that okay? I mean, am I the only one who's experiencing this differently, or is that just the world who's also going through the same?
No, and are you talking about it from like a sales perspective or like an investor pitch perspective?
Unfortunately, both. But
Okay.
the common theme being explaining the product, what they're trying to do, why they're trying to do, and that thing.
Yep. No, this is like totally common and normal. And I think typically and by the way, fundraising is sales. It's the same thing, but
Yes.
so with all sales processes, you kind of have to know your audience and you kind of tailor a little bit. So just concrete examples, when I'm fundraising for Iterative, the pitch that I do to US investors to invest in Iterative is completely different from the one that I pitch to Southeast Asian investors, right? Because obviously if you're a Southeast Asian investor, I don't have to educate you on all the countries in Southeast Asia and the fact that Indonesia has 300 million. I don't have to do any of that, right? Like you've been there, you know this, all that. US investors don't know, right? And so I have to kind of do the rundown and how like, okay, these countries have different languages and cultures. And so you have to do, the level of sophistication is kind of like different. And so I think you do end up kind of like tailoring kind of your pitch or your sales depending on kind of like who it is. And Dipesh, we'll work on this during the batch, batches in our next batch. One of the things that we end up doing is the trick to B2B sales actually is when you get on B2B sales calls, you don't start with a pitch. You start asking them about their problems. So it's like, okay, cool. Like, how do you guys do this? Okay, what is, do you have any problems with that? It's actually more of a conversation. You're asking them problems. And then what happens let's say it's a 30-minute call. Once they've talked about the problem in the last like 10 minutes or whatever, you basically just reform your product to solve whatever problem that they kind of like had. And so I don't know, if their problem turns out to be all around cost savings, you talk about how your product helps them with cost savings. If their problem is all around like speeding up their sprints or like, I don't know, whatever that is, then you talk about your problem from like that state. So I think the best sales things is like, okay, you want to have a really good foundational understanding of your product, whether that's fundraising or whatever, but have a good foundational understanding of that. And then try to get information from them on who, what, and what they're like, how sophisticated they are. And then you kind of like tailor your pitch on the fly. For other people who are curious how this works during the batch, we actually have founders record their B2B sales calls and send it to us. And then we give them feedback and we like help them write scripts. And we're like, hey, like you said this here. Okay, we might move this around. So we're actually kind of like going to that level of like detail with people if that's their problem.
Understood.
We got a question from LinkedIn Live, actually. So June helped us copy paste it. Thank you, June. Person says, what is your view regarding the reasonable ratio between growth rate versus activation versus monetization?
Yeah, I think the way that I always think about these things, and retention, I think, is the fourth piece here, is I always think about this as gates. And when I used to run product teams, I basically would, when we were doing our OKRs, I would reprioritize these four things for the whole company, and then we would focus on that. Okay, I think the first thing that you want to do, okay, I'm going to just, the answer is it depends on what stage of your company is in. So let me just take it from like the very earliest stage. The very earliest stage of a startup, the thing you care about is growth. And what I mean by that is just like, do people want this thing at all, right? So I'm almost not worried about retention yet. Like in the first kind of month, I'm just like trying to get people to try this thing, right? So I care about growth, and then I kind of care about activation a little bit because I'm like, okay, well, if a bunch of people sign up but they're not actually trying the product, it doesn't really count. So I'm just like, can I get growth? Can I get activation? And on some level, it's like, if you are worried about retention, but you only have 5 users, then it's kind of like, what's the point? Like you only have 5 users, so your retention doesn't matter anyway. So at the beginning, it's kind of like growth. Can I get people to try my thing? If you get some reasonable level of growth and activation where you're like at least in the hundreds or something like that, again, depending on your product, if you're B2B sales, you're not getting 100 clients, then you can start worrying about retention. And retention is really the mark of like, okay, is this product useful to people or not? If you can grow a product, that means people are interested in what you're building. And if you can retain them, that means they actually like it. So I've seen some products where it's like they get a bunch of growth, which means people are interested in it, but they have horrible retention. And what that always tells me is that they were interested in the idea of what your product was, but they didn't like the actual execution of that product because they didn't continue to use it. And so I think it's like flipping those things around. And then monetization, I think, only comes okay, traditionally Silicon Valley style only comes much later. I think in this day and age, with kind of like fundraising being a little bit slower and stuff, I think people have you want to think about it a little bit sooner, but think about it as nuanced. And what I mean by that is it doesn't mean you need to make like $1 million right now, right off the bat. I think for the early stage stuff, in like very bull markets, you don't even have to think about it at all. You have like, you don't need to have any idea how to kind of like make money. I think now you have to have at least some sense of like what you think is going to be your way of monetizing. And so you have to, if somebody asks you like, hey, how would you potentially monetize? You should be able to be like, oh, I think we can monetize in this way, and that way. And you get even bonus points if you run some initial test on those things. So let's say you're building some product that is going to monetize through ads, which is probably kind of terrible, but let's just use that because it's easy. One thing that I would do, and I would suggest companies in our batch to kind of do, is if you think that is, you can tell the VCs that you are going to monetize through ads and they'd be like, yeah, maybe. But the better thing you can do is you actually ran a test, even at some small number, and you're like, oh yeah, I'm not super focused on monetization right now, but I wanted to see like what are the potential kind of avenues for monetization. And so I ran this test where for 10% of users, I actually put an ad on just to see what the click-through rate is. Here's how the click-through rate compares to Google, blah, 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 blah. And then at least for VC, they can kind of get a sense of like, oh, okay, would that or would that not work? I don't know if that helps.
I just one question from probably a thread from this answer. Is there a industry standard or any sort of scientific definition of very early stage?
No.
And the other, no, right?
Yeah, no. Yeah, this is a really good question, because I think this is something that people kind of like get hung up on. Startups, there's no real science to kind of like stages, or even like for example, when we started doing startups, there was no seed stage. It was just Series A. And it was called Series A because it was the first investment, right? Like Series A, Series B, Series C. It was just like first investment, second investment. And then somebody made up this like seed stage thing because they were like trying to market their round, which was before. And then now there's pre-seed, and I hate all of it. So there's no scientific definitions. I would go even further and say there's no scientific definition to product market fit. I think this is a word that gets thrown around a lot. There's no scientific definition, right? Like I've never heard one, and I've never even actually like heard anybody try to define it. And the surprising thing is product market fit is something that is often talked a lot about by first-time founders, but you almost never hear second and third-time founders kind of like talk about it, because since it doesn't have a definition, it's just not that useful as a term. And so it doesn't like stand for anything, right? And so I think that for startups, there's like a lot of these terms are kind of like not great. Like, what is good retention? Well, it depends on what stage, depends on what industry. Like, so there's a lot of it that is like less scientific than we would all like it to be, which I think is confusing for people who are getting into startups.
One thought that I had, and it probably converts into a question, is, I mean, I don't know how to qualify this. I'm definitely not a Gen Z or millennial or whatever you call it, right?
Yeah.
And belong to a traditional business family, seen my parents do business, right? I sort of personally definitely find a big disconnect between what definition of some startup is versus what business is. I feel like I should say that I'm in the business of this versus startup. Or at least trying to join that dots, right? If I were to actually take the same thing and give it to my dad, or for that matter, his generations earlier, it would be very simple. Dude, you're selling product X, it has to be profitable. The COGS has to be less, otherwise you're not doing correctly. But vis-a-vis, the general industry standard is, you just throw around a lot of money to probably buy growth. And sort of is that like that? I kind of debate with that myself. Is that fair, or does it have to have a borderline in the sense that there's only up to a particular limit where you can buy growth, or you should buy growth, and after that, it's the profit. The product should talk for itself.
Well, so I think the point, the way to think about this is, it depends on what time scale you're talking about. Right. So for a lot of VC companies, the name of the game is you want to win all the market share. And then once you win the market share, like you kind of win the game, and then you can milk the profits of the game. So here's a better explanation and kind of an example. Think about search engines. I don't know how old everybody is in college, but I'm old enough to remember before Google, when there was a bunch of search engines like Excite and Lycos and Alta Vista and all this stuff, and Metacrawler.
I knew Netscape. Netscape or something like that.
Yeah, right. And it wasn't obvious that Google was going to win, and Google eventually won, and they burned a bunch of money winning, and they didn't make money until like years and years later, right? So they burned a bunch of money to win the market share, and then they've just been printing cash since. And once they won the market share, they were basically in unassailable, right? And so for a lot of these companies, for tech companies, and the reason why I think they do use this model of like spending money to kind of get market share is because they believe that they can get into these positions where they can dominate a market. And once they dominate a market, then they can worry about being profitable because they've already won the market and they have this position. And I think that's the thing that people forget, or it's a nuance that people kind of don't think about. They just like, oh, venture capital companies, they just like burn tons of money and they never make any money. And I think it's like, I mean, yes, that does happen. It totally happens, because sometimes you can win a market and it is not unassailable and like you just never like fully win it. But I think there's this other part that sometimes gets kind of like lost, right? And it's the same thing with like Apple. Like, good luck trying to make a phone now, right?
Cool.
Like, game's over, right? So I think you like fundraise to kind of do this stuff. Okay, Madhu, I feel like we have a bunch of questions.
Yeah, so Josh was asking, just curious, what is the percentage of startups that actually hit their weekly goal in previous batches? I think it would be also helpful to like maybe answer this in the context of like what happens in office hours.
Yeah, actually more than you would think, to be honest. I would say probably like a third to a half is my guess. And I think there's a couple buckets of this. There are some companies that just like come in and they just like hit them right away. They just have this clear goal and this clear thing, and they just start like crushing their goal to the point where like we've had to up their growth. So it's not 5 to 7%, it's like 10% to 12% or something like that. So there's some of those. There's some companies that obviously there's some companies that just don't hit their goals the whole time, and we have to kind of work with them to try to figure out kind of why, and you know, whether we should keep working in the same direction. Then there's some companies that are interesting in the middle. They may not hit their goals for the first couple of weeks because we're just like deep in the debugging process. And somewhere during the batch, we figure out enough of the bugs that they just start growing really quickly. So I remember there was one company during the batch did not grow at all for like the first 5 weeks, 6 weeks, like 0 growth rate. And obviously the retention, they like lose users. So they were like active user base was actually declining every week, right? And I just like yelling at them all the time, basically. And we were debugging enough, and then we hit this inflection point where we fixed enough bugs, and then over the next 4 weeks or next month, they 10x'd. They 10x'd in a month after that, because we just fixed enough. And it was like, at that point, it was just like, hold on to your seat. Like, it was just like growing quickly. So it's kind of all over the place, kind of like different things. But I would say somewhere in between a third and half the companies hit their thing. Madhu, maybe I try to just get through the last couple of slides and then we'll just like hit questions.
Sure, let's do that. Yeah.
Just because I've got like just like not very many more. Okay, I've been talking about programs. Let me just kind of hit this on the head. All the partners that you work with at Iterative have been founders, and most of them are actually like pretty accomplished. I'm not going to read all of these. This is like gratuitous bragging of kind of like our partners and visiting partners and stuff. But I just wanted to bring this out here because I think this is a big differentiation in our program, is that like the people you work with have really kind of been you before and kind of like had some like reasonable success. I also think this is the reason why our program can get away with not having a curriculum. I think if the program is run by a lot of people who have not been founders before, you kind of need a curriculum, because otherwise what are you going to talk about? You like need to research a bunch of stuff. We don't research anything because like we've kind of like lived through most of this. And so this is a really important thing for us. This is a hard line that I've drawn. Like, if you're going to be a partner, you're going to be a visiting partner to work with our companies, you have to have been a founder before. So okay, last slide. More gratuitous bragging, and I apologize, but my marketing team, aka Madhu, forces me to put gratuitous slides like this together. Does the program work? Okay, so up until now, we've had 5 batches, and we've invested in 68 companies and 122 founders. So Iterative has been around. We started in March 2020, so I don't know, almost 3 years now. Geez. So we've invested in this many companies. in the 3 years that we've been around, almost 3 years, the companies have gone on to raise $120 million in additional capital, and they are now worth over $1 billion. Somebody was asking about percentage of companies that hit their growth targets. One stat that we have is about 86% of companies who go through our program raise money in the subsequent 6 months after the program. So we had no idea what that number was going to be. And we were kind of like, oh, I feel like 50% would be good. And then we've been pleasantly surprised by 86%. So it seems like the program kind of like works well. And so, yeah, that's all of my slides, Madhu. I feel like I just wanted to get through the rest of it, and then I can just like hit questions.
Sure. I think we got a good question from Brandon. He's asking, what's the most valuable thing that past founders have mentioned from joining Iterative?
Oh.
Again, thanks for allowing us to brag, Brandon.
Yeah. Sorry, sorry, say that one more time.
What's the thing that, the most valuable thing that founders have, kind of told us that this has been the most valuable part about joining Iterative?
2 things. One is, okay, 3 things. One is the structure. So again, founders know this. Being a founder is like a weird experience because nobody tells you like what to do and whether you're doing well or not, and like any of these kind of things. And it's just hard to tell. I remember when we were starting out, we were like, we're growing. Is it growing? Are we growing fast enough? Are we growing too slow? You just like don't know. And so having the structure of like, okay, you have these weekly targets that you're trying to hit was really helpful. And then having people that you're like talking to all the time to try to debug your things, I think was really helpful. So just having the structure of like accountability and goals is helpful. 2, I think people find it really helpful to be able to kind of like just learn all the frameworks on how to kind of think about some of these problems. So the thing that I always say is I feel like more in Southeast Asia, I think San Francisco is pretty good at this. In San Francisco, all of the frameworks for how to think about startups are like reasonably well distributed and evenly, maybe not evenly, but reasonably well distributed. Southeast Asia, it's not evenly distributed and it's not well distributed. And what that practically means is a lot of founders are like inventing stuff that has already been figured out and they're starting from scratch. And my joke I always say is it's like founders in Southeast Asia are trying to learn physics and make up their own physics, and they like never like heard about the guy like Newton and like just use his equations. He's already figured this out. Like it's fine. You don't need to do it, right? And so I think we can kind of bring a lot of those things and kind of bridge that gap. So I feel like a lot of times we're just this like shortcut to like be like, oh yeah, we've had these problems. Here's how we like think about it. So that's that. The third one, which I think is underrated and under talked about, is empathy. I think since you're working with a bunch of people who have been in your shoes before, we kind of just like get it. And we know what the experience is like. Every batch, I will have some group of founders on an office hours call actually just start crying. And it's because they've never actually been able to like talk about how hard it is with somebody that they felt like understood. And I think that's actually really important. That's also part of the reason why we invest our full amount before the program starts, not in tranches, not afterwards, none of that kind of like nonsense, right up front. And the reason we do that is because we want to be able to create the psychological safety so people feel like they can talk about it. If you are running a startup now and you feel like you don't know what you're doing, that's how all of us feel all the time, right? And it's like totally okay. And so I think it's just like that empathy, I think, is kind of like pretty valuable.
I think there are a couple of people who are like asking very specific questions about like how we help companies grow, or like, do we give them access to, I don't know, do we open up some customers? Like how exactly do, partners help companies grow? I think that would be a useful thing.
Yeah. I mean, look, yeah, we do introduce you to people. We also introduce you to investors. If you're joining Iterative for that, you should save your equity. That's not the thing that's going to make you go. And that's honestly not the thing we're like that focused on. Let's say that I introduce you to one customer. Great. That's like a very linear way to think about it. It's like, cool, you got 1, right? How are you going to get 100? I'm not going to introduce you to 100, right? And so the thing that, the way that you want to think about our program is, it's the old adage of like, we're not going to give you fish, we're going to teach you how to fish. That's the thing, right? So yes, I may introduce you to 1 customer, 2 customers, whatever, some number of customers, but the real thing we're going to focus on is how do you generate customers by yourself? That's kind of the real like game here. And so yes, we do some of that stuff, but it's not the primary focus.
Okay, awesome. Okay, we have a bunch of like, I guess, questions. They're asking us, and maybe we can tease what's going to happen on Tuesday. basically, what do we look for? Like people are like, hey, what if I'm trying to get in, but I recently made a pivot. I can't, I don't have enough traction. And basically people are asking, what do you look for?
I'm not answering those questions until the next event. So you got to come to the next one for us to talk. We're doing a whole event on that. I'll go super deep. I want to give people a good answer, and I don't think I'm going to be able to give kind of like a really good answer. And plus we're like having a whole event of it. So come to that.
Next Tuesday, 6 p.m.
Yep.
Same time. Okay. Hold on. I think we have a few more for. Okay, I think people are asking like, okay, let's make this a two-part question, which is like, do you accept companies that are maybe just at the idea stage or the
100%.
MVP stage?
Yes.
And the second thing is like, for them, how would you measure, the 5 to 7% growth?
Yeah. So I think it would just, okay, I guess a couple of things. We definitely invest in people who are just ideas and that kind of stuff. In order for us to invest in somebody in a company that is just like an idea and the founder, we obviously have to really believe in the founder, and we have to kind of have some inclination that we like kind of think the idea is pretty interesting, because there's no traction or anything to kind of base it off of. So you have to kind of over-index on those things. Okay. How does the 5 to 7% growth work? We just pick a target that helps you with validation. So there was a company in the last batch I think literally pivoted like a week before the batch, and then I liked their pivots. We invested in them. And then during the batch, the thing we said was like, okay, well, the biggest thing that you need to work on is validation. And they said, okay, well, we got to build the product first. And I was like, nope, don't build the product. I was like, go get customers. Right. And the thing that we told them was like, we just set a goal of like number of customers, like calls to do. Right. So every week it was just like, how many customer calls did you do? How many customer calls did you do? And I think that it was like something like, I think the first week it was like 30, and the next week it was like 40, and the next week was like 50. I was like, your job is to like do 30 customer calls. And what happens if you have to do customer calls is they have to go figure out who the customers are and how to get them on the phone. So they're already working on growth before they have anything. And two, doing the customer calls, they're coming back and being like, here's what I learned about customer calls. Partway through the batch, we started switching from like pure volume, do customer calls, to like, okay, how do we map out all the different customers that you have talked to and which customer you should kind of focus on? So we wanted to develop a thesis on who we thought the customer should be. And so we had a whole bunch of these calls, and we helped them figure out who the customer target customer should be. And then we started working on kind of like closing those customers and working on that. So yeah, we just pick a different number that is aligned with kind of like whatever is the like next milestone for the company, and we work on that.
Okay, cool. Okay.
And by the way, if you're like, oh, I'm building my MVP, you should be able to build an MVP in a week. So if you're working on MVP more than like a month or more than multiple months, we should almost do this as an event where it's like, you tell me your product and I can come up with MVP that you can do in a week.
We kind of did this though.
We kind of did this, right?
Yeah.
By the way, for an example for people, when Brian and I were starting our companies, the rule that we made was we did 1 week sprints, and the rule was, do we spend another week working on the previous product, or do we work on a new product? And the rule was every new product that we work on has to go out the following Monday, no exceptions. Every week it was like a new product. So you can do it. Okay.
Okay, someone's asking, is there a minimum requirement to join? I think the answer is like no.
Nope,
Brandon's giving us ideas. Can you cover how to think about how to talk to customers in the next seminar?
Yeah, okay. Madhu, June, write that down.
Thank you for the idea, Brandon.
Yes.
You can also join Iterative and find out. Okay.
We should do that. That's a good topic.
It's a good topic.
It's a good topic. Yeah.
Okay. Nino is asking, compared to YC's application, we ask a lot less about the founder, background, etc., etc. I think we've just got like 1 or 2 questions on it. I guess you focus more on the idea and traction. Yes.
No, not true. I think the reason why we do this is for 2 reasons. One is that we get on calls with the founders before we invest, and I think we get a better sense of kind of like the founder through a call than through applications. I mean, I know about YC's process a little bit. We went through YC in summer 2014. We have some investors who are YC partners, blah, blah, blah. They just get so many applications that they have to put a bunch of the work into the application form, and because they just can't spend time like talking to all the applications. I think YC interviews now are like 2 minutes long or something like that, 3 minutes long. I don't know. It's like something super short now. And we just can spend more time with people. And that includes the batch too, right? So we can spend more time with the companies in the batch. But I would rather get to know somebody kind of like from talking to them And so we just don't have to put as much in the application because we'll spend some time talking to them.
Okay, I think we're kind of at the end. Do you have any last words? Maybe like one thing we can cover is like, I think generally like people join us at different stages, but is there like a right kind of person to like join the accelerator?
A right kind of person? No, absolutely not.
We're open to anyone and everyone.
Yeah, I mean, look. Okay, I was trying to stay away from this topic, but maybe let me say the kind of like general thing. There's no right person. I don't even know how to begin to kind of like answer that question, right? Good entrepreneurs come from anywhere, and they look like anyone, and they do anything. Like it's anybody. So there's absolutely no kind of like right profile here. The thing we care about is the startup working on a problem that is important? And that basically will dictate the market. Quick definition on important problems to me is a problem is important if a lot of people if a lot of people have the problem and it's very painful. And so there's actually other important problems where a problem could be like a few people have it and it's very painful. There's some problems that are like a lot of people have it, but it's not that painful. If you're working on a problem that very few people have and it's not that painful, you like don't work on that problem. But the best problems are obviously like everybody has them and are very painful. So we want to invest in startups that are working on important problems. The second part is, do we think the solution or thesis? So every startup we think of is a hypothesis around kind of like, hey, this problem is important and here's a better solution or a significantly better solution. So does the startup have, what is their thesis for a solution to this problem? And do we kind of like really believe that it's significantly better? So care about the problem, care about kind of like whether the solution is significantly better. Then the third part is, do we believe the founder is going to be able to kind of like navigate everything that comes with being a founder? Like, are you going to be able to like deal with the like 80 rejections from investors? Are you going to be able to kind of like make the right calls on pivots? Are they like motivated by the things that we think are going to keep them in the game? Like if you're primarily motivated by money, like I just don't think you're going to stay as a founder for very long, because there's like way better ways to like make money with a higher likelihood. And so the founder piece of it is like, we're just trying to figure out is like, is this person going to like be able to kind of like, you know, work on this problem for a long time and kind of like be able to make the right decisions and be able to kind of like push through all the, you know, often painful experiences of being a founder. So I think we think about it in those three buckets, right? So problem, solution, and founder.
Awesome. I think that's like kind of wrap. Do you have any like closing words?
Closing words. Applied iterative, I guess. If you think this program can be useful to you, we would love to kind of see an application. Doesn't matter how early you are. It doesn't matter kind of like what profile you are or anything like that. So none of that stuff matters to us. So we would love to see your application. If you've applied before, if you've applied for a previous batch, we have some rules around applying for the same batch. But if you've applied for a previous batch, we're happy to kind of look at them again. I think people would be surprised how often people get into a batch after their like third or fourth time applying. So you know, don't be shy. I think that's it.
Yes, the application link is, oh, by the way, hey June, sorry, I didn't tell you this, but I think in the next like minute, you'll get an email with like a special link to apply. It's actually a shortened like application form.
The hookup.
Yeah, I got them the hookup. So if you're still interested to apply, use that link. It's shortened and we'll take like, you know, closer look at it. So thank you everyone for coming. If you want to have like a better idea of like, you know, what exactly we look for when we kind of try to invest in startups, we're going to be having that live stream on Tuesday, 6 to 7 p.m. Singapore time. So we hope to see you there. Let other people know as well. Thank you for coming.
Thanks, everybody. See ya.
Thank you.